Ladies and gentlemen, welcome to AfroSwing FX. This will be the second video of top-down analysis. We've just done the GBP Canadian top-down analysis. Now I want to do the Euro Australian dollar top-down analysis from the monthly down to the 4-hour. And this is a follow-up to the course that we are doing, online course that we are doing, where we have a multi-currency and a multi-time frame analysis. So the purpose of a top-down analysis is to develop a narrative to understand what is going on, how it's going on, and why it's happening. So I'll remove all my drawings and I'll go to, you can just go to trading view. If you go to the video on GBP Canadian, I have attached a link to the description, in the description, where you can just register and join trading view. It's the software I use. It's a web-based software that I use to analyze the market. So I'll start on the monthly time frame. And the idea is to have a narrative. So what we are seeing visibly is that we are seeing the market kept pushing higher, but then it broke to the downside, then pushed higher, and then it did break this from a high. So what we are expecting is for the market to go lower, but we can have a proper analysis. So this is the origin of the market. And if this is the origin of the market, this is the original high of the market. So if we clone and see how far it went, so it never broke above this level. And for us to consider it a proper break, the candle must open and close above, and close above. For it to be a proper break to the downside, the candle must open below like this candle and close below. So this is what we will consider as a proper break. So we have a breakout structure on the monthly, and that tells us now we are officially in a bearish position. But at the same time, I want you to look at we had an impulsive move to the downside. Now we are having correction. So automatically what you expect is a continuation. But we cannot use the information on the monthly time frame as accurate data for us to trade. So we'll just we'll mark the key levels. So what I'll mark is the supply. That's a supply. I will also mark this as a demand. And then we will now improve our work and see that this is a breakout structure. That's a breakout structure. And then we formed another high, another breakout structure up here. But this is the low that formed that high. So what we are seeing is another breakout structure to the downside. That is what is giving us confidence that this is a bearish market. This is a bearish market. So I'll go to my texts. I'll start writing on the monthly. On the monthly charts, we have a bearish trend targeting the monthly low. Okay. We had this breakout structure, and then the market still came back to this supply level up here. Supply. So what we are anticipating is for the market to come and break this low. Let me call it the internal range. This is the range. This is the external range they are targeting, 1.1, and it might hit this level maybe in the next 5 years. Nobody knows. But if you check, this was August 2012. The high was April 2020. Those are around 8 years. So we are not anticipating anytime soon that this level will be breached. What is likely to be breached maybe will be 1.42, maybe by the close of this year 2024. Again, we will wait and see. So if I go to the weekly time frame, now we are focusing our analysis on this region. We are focusing our analysis strictly on this region. So if I go to the weekly time frame, my job is to improve what we have already done on the monthly. So if we draw this structure here, we call that a break of the weekly. Yes, and then we clone it, and then we bring it here. We have another break on the weekly, and then we have this one that was on the monthly. We can now convert it to the weekly. The aim is to just refine the work that you've just done. And then we have this one here, break on the weekly, and then we have now the final high that was formed here, break on the weekly. So this now becomes the low that formed that high. So we are going to pull this one here. We can mark this as either a break of structure on the weekly, or you can mark it as a change of character. I like using change of character. So it tells me already the trend has shifted from bullish to bearish. And let me just demonstrate. So when we are printing higher highs, higher highs, higher highs, and then we break the last low that formed that high, we officially have a change of character, and it looks like the market is reversing. So that is what we have here presently. That's what we have. But if we improve our analysis, you'll realize that there is a supply that is seated up here that was unmitigated. So maybe the markets will come back to this region today. No, okay, not today. Maybe it will come back to this region this year, 2024, or maybe it will come back to that region once it breaks this kilo. Again, nobody knows. Nobody knows. So we have this low, and then we had another low. Break of structure on the weekly. So it formed this, and then now we have our internal breaks. We have a break of structure on this other end, and then another break of structure, and then another break of structure. So on the weekly time frame, ladies and gentlemen, this is not a proper break, so we'll mark it as targeted, because we said for it to be a break, the candle must open above and close above. So it has opened below, closed above, opened above, closed below. There's no proper break here on the weekly time frame. That is on the weekly time frame. So what we will do, even before we go any further, we have another fresh order block seated here. So if I was to sell this pair, this would be where I would exit. If I was to sell, I'm not saying I'm selling, if I was to sell 1.599. But we have other imbalances and inefficiencies seated down here. That's why we are saying the long-term target is bearish. So let's go to the daily and refine our work. So on the daily time frame, we still maintain this breakout structure that we had marked out on the weekly, but now I'll have to add another one here, then clone and add another one here. We have this structure. Let me just mark this one. We have another one seated here, and we have another one, let me clone, seated right here, and then we have this final one that is seated here. Break of structure on the daily. Now officially we have a break of structure on the daily, and what you're seeing is that the market is yet to come back to this level. So we have other internal breaks. We have internal breaks that they seem to be pushing the market to this level. So we'll go down to the, oh sorry, we did not we did not update our notes. So let's find our notes. So we said, if we go back to the weekly, we had a change of character. On the long-term trend, we had a change of character. So that's what we have on the weekly. But on the daily, that's on the daily charts. So let's go to the 4-hour. Let's see what's happening on the 4-hour charts. So on the 4-hour charts, we have a break here. We have this break, and then we have this break here. So this is the final low that created that high on the 4-hour. So if we mark out this, we have a change of character. This is a change of character on the 4-hour time frame. Change of character on the 4-hour time frame. And once we broke, we left this. This was the supply where the market came to pick orders. So before supply, it was an unmitigated order block. There was a lot of imbalance there, but the market came back. It is an official supply, and you see we've been marking new lows. Let me call that a break of structure, and let's clone several of them. Then we had this one. Then we had now this break of structure. Now remember, we also had another. Now this is a break of structure. We have no idea where this market stopped, but let us just observe. So if we keep cloning, formed that high, and this formed this high formed this low, it formed that high again. So let's clone another one. Let's see what happened. So we had another break. So ideally the market had to come back to either one of these supplies, either this supply, and because there was and one of the reasons why we are supporting that supply is that we had almost equal lows up here. That's why the market came back to breach those levels. So this was the supply level. And then we had this low that was broken. Break of structure. So the market printed a new low. We have another break of structure. This is now the original low. So what is happening is that we're seeing the market looks like it wants to push even higher. It looks like it wants to push even higher. So possibly where the market is coming to pick new orders is at this region. We have a fresh order block seated on this region. This is 1.66. Possibly the market will stop there. Alternatively, the market might push even higher and come to this unmitigated region here. This unmitigated region. So what do we expect? So on the 4-hour time frame, this is what we expect. The market to keep pushing higher, possibly even to this region, then push lower. And where is it targeting? It's this level. Remember on the daily charts, that we are yet, once we break this level, that is when we will know. Once we break this key level, once we break this key level, that is when we'll confirm that we are now bearish. We are coming to target this region and this other region. Remember, these are the internal ranges. We have an external range that is seated down here. So once we break once we break the daily charts, the daily key level here, whatever is in green, then we will know we have officially shifted bearish. But in the meantime, on the 4-hour time frame, what we have a bullish correction, either targeting this region in green or this region in yellow. Once they hit those levels, we'll be looking for sell limit orders, targeting what level? Targeting this level. So we'll not be targeting this level of 1.4649, sorry. We'll be targeting the level of 1.59994. That's what we'll be targeting. So, ladies and gentlemen, thank you very much for your time. Do like and subscribe to, do like my content and subscribe to our channel and click the notification bell so that when I drop new content, you'll have access to it. Thank you very much.